Welcome back to Stocklabs for another market recap. We are halfway through July, and it's a pretty bullish week for markets. So, we were kind of looking for a little bit of softness to start the week. More or less, that only happened very slightly on Monday, and then rest of the week, market basically just went up. And if we look at how the indices performed, Qs were up 3.4%, S&P up 2.3, Dow up 2.3, and what did we miss? IWM up 3.7. So Russell was the strongest this week. This is probably the best week overall in the market for the last, I don't know, maybe like looking back a month or something. So yeah, it was solid all the way around. Crude oil was up. So crude has had some bullish weeks that it's strung together now, which is a little bit of a change from what we've seen over the last 6 months or more. The trend for crude has been choppy to down for the most part. It's kind of making a little bit of a run here the last, let's call it a month. Emerging markets also up 4%. This is, again, heavily skewed toward Chinese stocks. So China makes up about half this ETF, I think. So nice week for them. Gold up 1.6, and credit was also pretty strong. The bond market was up 2.25. High yield was up almost to 1.75. So pretty good week for risk overall. If we look at the leadership stocks, you can imagine that they also probably did pretty well this week. We've got Nvidia leading, up almost 7%. Meta not far behind, up 6+. Google up 5. Amazon up 3.6. So 3.6 was kind of what the NASDAQ itself did. So Amazon and below was kind of market perform or worse, but the top of the bunch were Nvidia, Meta, and Google. Worst performer was Apple, flat. I think this is, I don't know, maybe a second or third week in a row that Apple was flat-ish. So probably what you will see is some kind of thing where a handful of these sell off and Apple's the one that ramps, because it's kind of like a musical chairs thing with all these stocks. Two or three or four of them are up big one week while the other ones do nothing, and then they flip vice versa and go the other way, and the NASDAQ does great either way. So it's kind of just like a merry-go-round of which ones are in charge. If we look at our breadth by industries, it was solid across the board. So tech was the leader, up 3.15. I mean, again, the median tech stock is underperforming the NASDAQ. NASDAQ was 3.4% to the upside. So, I mean, tech overall is doing well, but it's not like there's a giant rotation into tech. It's kind of like there's a lot of money in a very concentrated cohort of tech stocks. The rest of the tech stocks are kind of, some of them are doing well. There are others that are doing well, but on the whole, median tech stock is really not keeping up with the NASDAQ, which is kind of unfortunate for them. Industrials up 2.8%. Services or utilities were third, up 2.5%. And then the rest were kind of in line with everything. Basic materials up 2%. Consumer up 1.9%. Financials 2%. Healthcare up 1.6%. Services up 1.8%. Healthcare is kind of reassuming this role of being a laggard kind of all the time, whether it's up or down. On the downside, it really gets whacked. On the upside, it doesn't quite ever really get there with the rest of everything. So we'll keep an eye on healthcare. Could just be like a shorter term trend playing out, but I've been noticing this like for several weeks, that's kind of the case. Subsector wise, we've got a good amount that are up. There's only a handful, maybe 12 or 13 that are up over 5%. The The big leaders were silver, precious metals, silver and gold, and then you also have copper kind of behind, a little bit behind that. The silver and gold markets really broke out. I think there's a renewed. I mean, people have been betting the Fed's going to slow down for a while, but now people are really starting to bet on it because they're assuming the Fed is the next hike will be the last one is the assumption. So if Fed says anything otherwise, it's going to be interpreted as hawkish, and these things might get hit. But for now, it's like kind of understood that the last hike, which is the July hike, it's over after that. I mean, maybe they'll keep the rates steady at 5 or 5.5, whatever the number ends up being, for a while, but there won't be any further increases in Fed funds. So we've also got software up 6%. It's pretty good. Pretty good. It's been a while since SaaS was kind of near the top of this leaderboard. So it's a good thing to see. And then if we look at breadth by market cap, got 1 to 5 billion of 3.7%, 5 to 10 billion up 3.5. We've got 10 to 50 billion up 3. So you can see it's pretty solid, pretty uniform across the board too, like 3% on the upside. Here's my cursor. Okay. 50 to 100 billion is 3.16, and 100 billion plus was up 2.9. So everything across the board was up about 3% to 3.5%, or 3% to 3.75%. Very uniform ramp in the market. So there wasn't a lot of discrimination between market caps. Wasn't a lot of discrimination between sectors or anything. It was kind of just overall risk on week. Everything was sort of like go. If we look at the intelligence screen, what do we have for this week? We have inverse VIX futures. So VIX remains bearish. We've got gold miners. So Stocklabs kind of likes the gold trade to continue this week. We've got China bullish, banks bullish, trannies bullish. We've got ARK's autonomous ETF bullish, cyber bullish, and weed rarely bullish, but for this week, maybe it catches a bounce. So, general sort of risk on sort of look here, transportation, financials, sort of like real economy type stocks, maybe playing catch up with the ramp that NASDAQ had this past week. We invert this to see if there's anything of interest for the downside, and there's really not. Oh, sorry. Some things just popped up. So what do we have? Okay, big oil inverse is bearish, so oil stocks should be bullish this week. Got ultra Dow is bearish, so Dow maybe some chop or weakness. Got bear internet bearish, so internet stocks bullish. Home builders bearish. Okay, this gold miners ETF is also bearish. This kind of cancels out the nugget one from the other side. Tesla bear is bearish, so bullish Tesla this week. GDXJ bearish, and some kind of healthcare ETF is bearish. But I mean, overall, I think you're just looking at a choppy week more than anything. We had a cluster of overbought signals on the market. Okay, they were on the 3-month look back, but We never quite got there on 6 months. So we've got cluster of overbought signals, over the last several sessions. This generally produces at least some kind of pause, whether it's like sideways action that just chops around and consolidates, or it's just an outright pullback. I mean, idea is we should see some sort of consolidation in the indices. So we'll see how it goes. I mean, I think I didn't look at what's coming up this week, but if there's anything, as far as earnings go, we're kind of in earnings season. Probably the most important ones are obviously all the FANG ones, some of the semiconductor companies. Certain big box retailers will give insight into the economy, but for the most part, I think you're pretty much safe to just play the existing trends. I mean, like I said, keep an eye out. There should be some consolidation this week, especially NASDAQ was up 700 or 800 points off the Tuesday open by the time it got to the end of the week. So, I mean, that's a big move to just keep going, unbroken, but we'll see. So that's all from me. Hope you guys have a good week. We'll check back in on subsequent recaps. And yeah, take it easy out there. Talk to you later. Bye.